Happy Thursday, traders. This is Tanner with Charting Options. Today is January 13th, 2022, and I am back to recap today's day trade ideas. Hopefully, quickly. We had 3 different day trade ideas: Apple, Snapchat, Snap, and SPY. All 3 triggered to the downside. SPY also triggered to the upside. That was a fail. We'll talk about that. We'll talk about the rationales for the upside and the downside for most of these. They're at least relevant for Apple and SPY. They're not so much relevant for Snap. And basically how price unfolded today after getting below our levels. As we know, the market obviously continued to started off on a gap up, and we talked about this morning how we were going to be interested to see how active selling and sellers were this morning on this morning's gap up. So we have back-to-back gap ups. We had a gap up yesterday following the release of CPI data. That was faded. We had another gap up this morning following the release of unemployment data, and that was faded even harder. Faded is a euphemism. That's really not even strong enough. We pulled back really hard following today's gap up. So the market looks extremely weak right now. We were already at critical junctures coming into the week, and now we are at or below those levels, depending on if you're looking at the NASDAQ or if you're paying attention to SPX. SPX lost 4,700 today. It then tested the 50 SMA, 4680-ish, lost that, and then obviously was pulled back even harder into close to 4660, which is a really, really big level on high time frames, and closed right below. So there is a lot of uncertainty in the market right now, and with that has come a lot of selling and just a genuine lack of demand as well. Holders in the market do not like uncertainty, so when it occurs, we get pullbacks. So with that being said, it was beneficial for our day trade ideas, and as we talk about in all of these videos, it's really important to have the general broader market at your back when trading these, whether that's to the upside or to the downside. And in the case today with the 3 that triggered at the downside, all of them, we had the market at our back, so there was a tailwind to help benefit our position. Now, Apple implicates the market itself. So if Apple's going down, typically the market goes down. So that's just implied, but specifically referring to Snap. And then obviously SPY is based off of what SPX does, and SPX is based off of, in large part, to Apple and tech in general. I want to say about 40% of the S&P 500 is made up of tech and communication services, which are essentially tech. Those are names like Twitter, Snap, I believe, is in the S&P. Communication services, Netflix, that would be another one. So when those pull back, it's really hard for the market to stay afloat. And obviously, we got that today. So with that being said, I'll mark up these charts with you if necessary. Right now, they stand in the same structure and the same illustration as I shared with you this morning. You can see this is the 10-minute time frame. I developed these levels on the 10-minute. I look for candle confirmations on the 10-minute, so a candle close above or below on the 10-minute for confirmation for a potential move to our direction. At that point, especially today being Thursday, I trade on the 5-minute, and today the 3-minute. Because we're so close to Friday, I typically trade same week expiration. If we're trading ETFs, I may even trade the intra-week expiration. So it's really important to pay attention to lower time frame moves. It's as little as the 3-minute. Some people trade on the 1-minute, which is just a little too much for me. It's too much noise. I get too shooken out of positions, both to the upside and the downside if I do that. But today, I definitely traded on the 3-minute because that is just generally what I do on Thursdays, and I'll do the same tomorrow for Lotto Friday. Obviously, or maybe not obvious to everyone, but at the same time, I am still focusing, or I still have the other time frames up on a chart. So, like, for example, Apple, if we're trading Apple, and this is what's really nice about TradingView, I will generally have maybe in the top left corner the 3-minute that I'm paying attention to, the top right corner the 5-minute, the bottom left the 15-minute, and then the bottom right the 65-minute. So we're getting an overall view of Apple itself from the 65 all the way down to the 3. In the same sense that I just mentioned, we want the market at our back. We also want time frame continuity. I always mess that word up, but time frame continuity. So if we're bearish on the 65, we're bearish on the 15, we're bearish on the 5. It just adds to our conviction to be short and not long. The same can be completely said inversely. If we're bullish on the 65, bullish on the 15, bullish on the 5, we have more conviction to be long. Anyways, all that to say, the session breaks, or the session is broken by this vertical line. So this is the delineation between sessions. This is all of yesterday's session where my cursor is going left and right on. This is all of today's session. Again, these are all 10-minute candles. So this is 10 minutes of time frame represented by each candle. Okay, with that being said, coming into the day, we wanted to see Apple was working through this triangle yesterday. It pushed up from the gap up, pulled back. It filled the gap, which was really a signal yesterday that we likely were going to push lower. When gaps get filled, it's not as bullish or bearish, depending on where the gap is, as you would want price to be. Anyways, from there, price pushed up and then just traded sideways into close. So we wanted to see price go ahead and get above this trend line, this very ephemeral trend line just from yesterday, and then go ahead and get above 176.39, which is right where my cursor is right now. That was this high, this intraday high. You can see it acted as resistance early yesterday. Price got above, and then when it was unable to hold it, so it acted as a pivot down. If you look left, it's done the same. So that was our big level to get above. And if you pay attention if you look on the 65 minute, it's a pivot. You can see the green line. The 65 minute is a pivot. I often use pivots on the 65 to determine big levels to clear or to get below for these day trade ideas. So all that to say, the first 10-minute close wicked above our level, did not give us the close above, just wicked above. Second 10 minutes stayed inside, wicked again. I had mentioned on Twitter that this was showing some strength early based off of this, and then from there it faded. Let's see, on the 5-minute, nope. From there it faded. So this is another way, when it got below the consecutive, so we had double 10-minute candles here. When it got below those 10-minute candles, that was a short signal. We're trading a rejection at our pivot, our level to clear. This is just another way to trade these levels if you're paying attention to Apple. You do not just have to wait for Discord alerts to the upside or the downside. If you're actively trading and monitoring these charts, this is after a consecutive double 10-minute at 175.94, which is right at that 176 psych level. If you look left, this is a big area. Yesterday, just yesterday, you can see resistance, support, and then pivot down, resistance. So anyways, I digress. Just another way to trade it. Price then went on to pull back really sharply, and then on this really big igniting candle closed below our level to clear, which was Tuesday's intraday low. But that wasn't the trade. The trade was getting below this trend line. So I'm popping back the 65 minutes so you can see the trend line. This is the trend line from the December high. Price was rejected at it on December 15th, which was 2 sessions later. You can see price then yanked back. It rose drastically just before Christmas. Got above, retested, used it as support, retested, used it as support, retested, used it as support, pushed higher. So this is a huge trend line. You can see here in last week, early January, price tested it, used it as support, then lost it and pushed lower. So this is a trend line that's acting as a pivot, which trend lines do. And then you can see early this week, price tested it, was rejected, tested again, got above, broke above, and then acted as a pivot to the upside. So we wanted to see this hold. If this was lost, that was the trade. Now, I can't time when that's going to happen, so I have to set a level for you guys to get an alert based off of that. But you can see that that was the trade, and we got the quintessential retest and breakdown. So right here we have a textbook, I'm drawing right here, a textbook rising wedge, a bearish wedge. So we have an igniting downside candle in a downtrend that has formed a wedge, a rising wedge, back to the retest of this trend line. So let me bold this trend line. That's the trend line I just went over, dating back to the December high. So over a month ago. So now we have this rising wedge into that trend line. We have a rejection here and then a harsh pull to the end of the day. So had you not entered here, you could have entered right here. Or had you entered here, taken off, you could have re-entered. Had you entered here, you watched price pull down, bounce a little bit. You could have added more here, but this was the trade. right here. This rising wedge breakdown, which then put price all the way down to a low of 170, 179, and the 172.5 puts for this week went nuts. If you excuse me, the percentage you'll see is if you were to add here. But if you were to add here, the percentage was almost like 3x what the total percent was just from this itself. Anyways, all that to say, I hope this didn't shake you out. If you're paying attention to price and you're familiar with how price works, you know that price doesn't just go straight down. So we can't discount how bearish this candle was just because we got a little bit of a bounce. And all this was, if you look in the 10-minute, was just a bearish wedge that wanted to retest this trend line. After confirmation, this is what we call a retest and rejection. That is the true short right here. And obviously you can see price obliged. Anyways, all that to say, let's go on to Snap. I'm getting long here for you guys, and I apologize. Snap gapped below our level, which was 42.06. It was support yesterday. It was yesterday's low. It was support on Tuesday when price had gotten above. So it was a big level to hold. Price gapped below it, retested 41.50, and then was rejected. And that was, if you didn't want to get long right away on the first 10-minute candle because of the gap down, when price had this harsh rejection at 41.50, followed by a really another nasty 10-minute candle, and then got below the low of the day. So we have, this is the 30-minute low right here. A lot of traders trade off the 30-minute low, whether it's trying to trade a bounce or trading to the short side. Right here is the 30-minute low. When price got below that, that was your short signal. On top of an already weak price action. And then from there, price went on. This was a killer trade today. I was able to catch it for a couple contracts. Not the whole move, but fortunately some of it. But price went all the way down to 38.26, which was below the Tuesday low and a new weekly low and a new 2022 low and a new 52-week low. This is going to come up on the scans today. So all that to say, Snap was a relatively easy trade today because we had the wind at our back. SPY, a lot like Apple, I wanted to see price clear this trend line, and I had talked about this morning with SPX from the January 4th high. It did that in the first 10-minute candle and gave us a close above. So Discord gets the alert. You pop on the chart. You say, okay, this looks good. Let's see what it wants to do. And then the next two 10-minute candles went nowhere. And then we had this really harsh rejection below the trend line, below our trigger. That not only was your signal to get out of a trade that you might have put on, but that was a short signal. This is a failed breakout at a big level of resistance and a big level of horizontal resistance and a big level of trendline resistance. Failed breakouts, just like failed breakdowns, provide really, really good trades. And you can see from here, price went on to push a lot lower, bounce off our trigger. Our trigger to the downside was just yesterday's low. It's a big pivot. If you look left, it's acted as a big area. Price is very sensitive to it in the past. Price pushed off of it, tried to bounce, was unable to do so, and then finally gave us our 10-minute close below. And again, just like Apple, just like Apple, and as I mentioned at the beginning of the video, the S&P is largely based off of what Apple does. We had this bearish wedge that retested our level and then faded to the low of the day. This is textbook, guys. I just want to make sure that you aren't getting shaken out of these trades because of this bounce if you didn't have the perfect entry. So if you enter down here, price goes against your position, it is prudent to maybe take a position off. I understand that. But don't turn away from the screens and expect that that is then to just going to rip. Because all this did was form a bearish wedge that broke down and provided an amazing trade. You'll again, like Apple, you'll see the percentage of the percentage potential gain based off of this candle, but it's very different than this candle. This was the true trade here on this breakdown. Anyways, I was getting long. I'm a little winded. I hope this helped, guys. If you have any questions, please ask. Thank you for watching. Thank you for your support. Have a great night. A lot of Friday picks out tomorrow. Hopefully, we don't get a huge gap down. And I just say that because gap downs or gap ups really mess with levels, and they delay when I can send out the levels. Anyways, have a great night. Thank you.